Hello and welcome, as today's date is the completion of the 22nd day of September 2020. My name is Derek. This is the Money Charts channel. Welcome. All bets, trades, and the like. That is within each's own risk and their own reward. And entering into a new season now. The summer is over. The autumn or the fall northern hemisphere has now arrived. And another arrival, at least possibility, is reversal of trend amongst the daily term time frame in that of silver, as in yesterday's session or that of Monday. The silver market had a significant drop of 7 2/3%. From what I heard, was called through the vague grapevine or through a phone call conversation, most likely relatively accurate in that of, I think it was between HSBC, but I'm pretty more sure of Deutsche Bank, or more confident rather, that whistleblown information has come in about them doing some eeky kind of stuff, we'll say. And well, what I'm thinking is they need to raise cash. So what did the stock market do yesterday? Well, it sold off yesterday, and well, so did this. And I think this was an exact case of what this is. And as the market states, forgetting any fundamental news whatsoever and just going on in math and numbers and only price pays, and why these Fibonacci works, the levels that they do, well, it's just what it is. Their current statement of what's going on within yesterday's session after resisting the last level is that we're going to come back to where we came from, and thus we're looking to be going down to $20.28 general area for support. There's your short answer. Whether it accurately does that or what not, time will tell. For if it doesn't, this would be a failed breakdown in time. We'll see if that actually happens or not. But when it didn't resist this level on the 22nd of July, 2 months ago, it had a clear, concise move to next key level, resisting it for several days starting on, looks like the 5th or 6th of August, and then a very big correction here. This is 13.7% down on the 11th. And another test of this resistance piercing barely above on the 1st of September. And then just a long period here just staying within this. And well, how these resist and support so well, because that was a statement when it didn't resist this. Yeah, we're going to go up to 28.5. And okay, it did. Okay, what's next? Well, it never even really had an attempt to break above it. And then the statement, of course, as it broke down below the support at roughly 26 low change. Clear, concise break. So on a failed breakdown, that would mean, of course, relatively quick, you'd see signs like this gets not only into the 18 average and where it comes from, but then would break above the 18 average of highs. And that's only, of course, case on the if 6 case scenario. For if any rallies come in and you start to resist this and you get, say if you get to the 18 average of lows, then you start to go down, and then you start to retrace close to previous lows, then you can be pretty certain. I hate using the word certain, but probability odds being higher that we're going to have another leg lower. Or same thing, if you hit the 18 average of highs, then you start to see a nice clear break below the 18 average of lows as it's going lower. Same sort of model as well. And then for any type of, this being a failed move, or just looking for any type of positive bullish momentum, I need to see some sort of bullish action above the 18 average of highs. And right now, amongst this time frame, it is on the opposite end, below the 18 average of lows. This is the first full day it's had staying below it. Going back, oh boy, we're going back to like this day here. March the 23rd was the last full day it spent below the 18 lows. All right, what does this mean on multiple time frames? Yada yada, hourly time frame. You can see from this decent sized decline, we resisted within this. Failed below in here, but obviously there's where we made a new low to this one, resisting this area of support, which is generally what's been going on. But since it had an attempt, I guess a 9 o'clock timestamp, and did have, because it hit resisted here, had an attempt to break down and didn't do it. But from the move here, 1,300 hours, we came up to this 18 average of highs, enough to make this flatten out, just really sideways the move on the very short term, just neutralize the situation. Still has a long ways to go yet for me to say that there's even a short term recovery coming into play. And for me to see on the short term, okay, we're ready for a new leg lower. If this holds and stays below like 24 low change for a while, or if you see it start to rapidly going below 24, then I'd be thinking, yep, that new leg lower could and probably should come into play. And of course, that's all the short term in this. And the statement to me has been made that it's going to 20 on low change. Well, what does this mean now on the more longer term time frame? And I'm going to just change the market because I don't need these fib numbers really anymore. And I want to get more longer term stuff with this because this level brings me back to the 1970s. So on the weekly chart, we have made our first move back down to the 18 average since breaking out from this play way back at the start of the summer and well back below 18. And where we came from, oftentimes I'll say, yeah, let's look back to going to where we came from. That's an extreme move if we do that because of such a magnificent break. Because normally it's like, okay, well, if we break this general area of resistance, let's make a move in here and then come back. Well, that was a much bigger move. It's almost like a double shot. So now they've had a double shot. That tell me, one, you can have a larger volatile correctionary moves. That should go without saying. But now we've got the potential of maybe finding a level of support without even having to come back to where we came from. And then if you look at this, well, instead of this area, well, where else did we come from, which was higher than such? And in turn, we'd be looking at, well, we had this level of resistance. So this is like 21 low change. And you know what? That would be, especially because it coincides again, I believe, with the, because I'm really bad at forgetting numbers, 2085, I think, 2028. It would coincide with a Pierce Extra, or in this general area here, as a very good comeback area for the market. We've already had a lot of the short-term correctionary moves. So obviously, anytime you see any type of getting back above this, and then there's going to be the cases, especially as we resisted this before, that it'd probably have a very big break. But until then, that's not the case. So as it goes, we're already established this level of support on the August 10th stamp. We've came back to it now. Is this a possibility where we could maybe establish a range even? We've already got 23 mid-change as support. We've already had multiple resistance at 28 high change. And it could just be part of this, the neutralization. But if we have any further pullbacks, well, this would be hitting the 18 lows and going below it. And if we look at this on a more longer-term time frame, and I'd like to use a time frame like this when it's such a big move, because on the weekly, yeah, if it goes below this, it's still a good retracement from this low to this high. And if I want to use the 18 average of lows as an indication for if this is going to be a good move or if this is going to hold, I'm using the wrong time frame. And I got to think the monthly chart would be so much better, considering I see the 18 average of lows newly rising, breaking out from within this range-ish area and then on its way to like getting towards this point. So now with this, the price action, if it starts to decline and the 18 average, which is rising, connect to each other, I'd like to see it all connect together in a where we came from scenario. And within such, all of this general area is what I would, basically that's the ballpark level. So a pierce below 20 and a pierce above 20 would be within that ballpark area. And most certainly, the 18 average of lows in this general area is a major must-hold area for the market, and I think it will. And when we look at this, just a little bit interesting volume in here. This is just awesome to see, and like breakout volume in here. To me, I believe that this thing is ready to go. A while back, I basically felt and stated that this is the last call for these cheap prices. Most certainly, has been. And even now, if it comes back down, like, oh, it comes down like 21, low change 22, you're like, oh my goodness, what a deal I'm going to get. Well, all this time, the price action was consistently well below 20, closer to 15 to 17 for all of these years. And really, that's a lot of the whole point. For all of the years, it's been at that type of status. And to finish this off, and I know a lot of people love this cup and handle formation, and the prototypical point is you have a key low. So much lower than where you came from, which means you have a very good rally and you maintain a higher low. So there's your higher low. Then you go back to previous high, which is what it did in 2011. And then you do it again. You could have took the resistance out, but you didn't. Okay, whatever. So now you want to higher low it again. And really, as long as it held and stayed above this area here, and it didn't even go down that low, that would be enough. And Here we can see it comes down, has a good amount of time. Not too much, but enough where you can really notice it. And then you start to play it out. So you got the cup, the handle, and not on the break of a previous hit resistance, which on the cup and handle would always be a third break hit, because hit 1, hit 2, and if we have this thing upcoming would be hit number 3. And then on the break of the situation, whether you're looking at this on a super long-term time frame, which we are, or you're looking at like a daily chart, a 5-minute chart or whatever, you can expect there to be a good break up to some sort of key level, however you may look at it. Thank you for tuning in and have yourself a great day. Bye-bye.